So welcome to another Wednesday with Brent and Lee. If this is the first time you've been to our channel or watched this broadcast. On this channel, we talk about all things real estate in Palm Beach County and the Treasure Coast. And here lately, we've been talking a lot about Florida and its whole, right, Brent?
That's right.
All right. So I got Brent from Unitas Lending on with me. How are you doing this evening, Brent?
Doing great. Had a wonderful day today. Good stuff.
Awesome.
Yeah.
Me too. Good day. So tonight we're going to talk about what's going on in the market, some recent news, market news. We're going to talk a lot about money, what the experts are saying out there. And then we're going to give you our opinion on stuff. We're also going to answer your questions as always. So make sure you leave your questions and comments in the comment section. And if you have not subscribed to this channel, go ahead and hit that subscribe button so you don't miss any of our real estate tips and tours, because we're putting videos up every single week. And that's because
all right. We'll see what's going on here. Sounds like Lee's up to something.
that's
There
the
he
way. This is the way.
I knew you were up to something.
So for all of you in love the Mandalorian, that is my birthday present. Also, this is my birthday present for my family. My wife and family bought me my Mandalorian helmet, and my daughter bought me this beautiful Black Clover limited edition. I think it's Floridian hat.
That's awesome. That's awesome.
All right. So let's get going, man. So I need my glasses on. I can't see anything.
That's funny.
It's part of getting old, I guess.
You know, I've never seen Star Wars, Lee. You got to take me sometime. Maybe
Dude,
we can rent it or something.
Man, he's got to come over and we'll do
the
trilogy
or what?
thing. Yeah. Well, there's 6 of them now.
There's 6
and
of
there's
them.
Like there's like I don't know. There's got to be more. There's like I think there's 6, 7. There's 8 now.
Is that right?
I think there's a total of 8 of them. And then there's also now on Disney Plus. They're running Obi-Wan, which is awesome. So that's really, really good. Every Wednesday night, my wife has to be quiet so I can watch Obi-Wan. So, I don't know how you're 60 years old and you've never watched Star Wars, dude.
What is up
with that, man?
I know.
It is the greatest story of good and evil. And, it's awesome. I mean, I can't even believe it. It's terrible.
I got to do it. It's un-American, really.
Yeah. And then you got to go to Disney and ride all the rides.
Right.
All right. Thanks, Gerard, man. Gerard just told me happy birthday.
Yeah.
So anyway, let's get into it. First I wanted to drop a comment that I got the other day. So let's drop this in real quick. All right. I got a comment from a gentleman the other day. It's a myth that Florida is cheaper. The yearly taxes are based on sale price, about 2%, which is $15,000 on a $750,000 home. So, excuse me. So that is the tax rate in Port St. Lucie, but in Martin County, you're under 1%, and in Palm Beach County, you're at 1.6%. But let's just figure that out. And by the way, when you guys leave these comments and I answer them on the show here, we're not picking on you. We're answering these questions so that you understand them. And these are great questions because a lot of other people have these questions. And this is what this is for, so we can cover this kind of stuff for you guys. So I'm sorry. I don't know what it is. My sinuses are acting up. Excuse me for clearing my throat. It's just terrible. Anyway, so let's look at 750,000. And it's not on the total amount. It's on the assessed value, but let's say the assessed value is 750,000. and that would be 2%, which is 15,000.
Mm-hmm.
Now, if that house is in Port St. Lucie, you're getting a brand new home, tricked out. All right, everything in it. I mean, that's a nice home in Tradition, 750,000. That's going to get you about 3,300 square foot in Port St. Lucie. I mean, that's a big house.
Mm-hmm.
So let's take that. So the builders are sending me all the properties because every builder now just about has spec homes sitting there or homes that have come back on the market. So let's take that to 1.5 million and go 1.6%. That's $24,000 for the same house in taxes for a 20-minute drive, 30-minute drive, let's call it. So it's all relative. Port St. Lucie, the reason it's getting so many people is because it's such a great buy. You're getting so much home there compared to what you're getting here. Also, keep in mind, the same house is going to cost you, you're going to have way more land in the HOAs that you have in Port St. Lucie than you do here in like Jupiter, Palm Beach Gardens, or, one of these communities. I would say Westlake has pretty nice lots. So those are nice lots out there. But again, the difference in the tax rate doesn't even come close to what the house would cost you to move south. It's just a whole different world. So that's the big thing. But more importantly, let's talk about this in another state. Right. So go to California, because a lot of people from California are moving here. A lot of people from the West Coast are moving here. A lot of people from up north are moving here. So where you have state income tax. So when you have state income tax, so Brent, what's the state income tax in California?
It's knocking on 13% in California. Okay. Yeah.
Right. So 13%. What's the sales tax?
The sales tax, I think it was I think it was 6.5. I think.
Okay. And what's the real estate taxes out there like?
Well, real estate taxes, it depends. It's like it is here. I had a $500,000 house and it was over $8,000 per year. And then, but that was with no Mello-Roos. That's what they call it there in California. In a newer development like Tradition, it'd be double that. As a matter of fact, we looked at homes that were in a new development that had that. It was to build out the infrastructure, the roads, the libraries, public.
We have a CDD bond in new communities out there too. So they're gonna it's about 2.2% with the CDD bond.
It's about double. So we would have been about 16,000 a year.
So, and it costs us in Florida $40 to register a car a year. It's about $40. What's it in California?
I paid $800 a year. Yeah.
Right.
Yeah.
And then look at gas prices are stupid here, but I mean, go out there and it's over $6, $7 for gas.
Yeah. We had three, just to give you an idea. Yeah. We had 3 businesses. And so, when you file an S corporation, we had a real estate brokerage and a mortgage company and an escrow company, and you paid $2,000 for each company before you made $1, just to register your company every year as an S corp. Here it's like $100 and some bucks, and then you're one and done. Right. There's no comparison that way. So, I think it's a great question this person asked.
Me too. I think it's an awesome question.
Yeah, I think it's definitely need to talk about it, because you do have to look at the whole picture, and if when you really dissect it, we moved from California in part for this reason, because it was very difficult to operate a business. We had 40 employees, and the numbers were big, and so when the profits are big in the good years, you get it taxed away. I wrote large checks to the state of California for income tax, at 13%. So, that's gotta come from someplace, and then you've got the cost of living. So all your employees, need to make a higher wage to keep them, and then in a lifestyle that's even acceptable, as you can see, the news out of California right now. So it's a difficult situation. It's squeezed business owners big time.
Right. I mean, it's just it's an, you know, and then New York, I mean, we have tons of clients from New York, and it's just the same situation. People are moving to Florida because it's cheaper to live here. And the housing prices are much less also. And it's a great place to live. I mean, there are cheaper places to move in the United States, but it's not as nice as, you don't have the oceans and things like, Florida's a nice place to live, I think. Some people don't like it, but I think it's a great place to live. So,
beautiful.
Anyway,
Yeah.
what I want to say is that it's all relative, to what you're paying for a home. And that's really the key. I would think eventually, St. Lucie County will bring that tax rate down some. I mean, the real reason it's that high is because they took such a beating in the 2008. I mean, in 2008, the lenders foreclosed on the whole city, and it was just a disaster. And crime went through the roof. I mean, you walk in, I mean, homes that are selling now for $450,000 were 90 grand. You had investors came in, bought up everything. So, in my opinion, and people could disagree with this, obviously, but in my opinion, COVID was the best thing that ever happened to the Port St. Lucie market, because people fled here for all different types of reasons. When they started moving in, they started buying these houses off the investors. So you started, a lot of these HOAs. I mean, Tradition, you couldn't. I mean, I never sold a house in Tradition till COVID, because nobody wanted an HOA, and the HOAs that were in the eastern part of Port St. Lucie, on the other side of 95 and the Turnpike, they were all they were just all rental properties. And so in Tradition, the whole thing was rental property. So it's been, since we've come out of COVID, and the, rates went down, and the market blew up, and, we saw this huge burst in the housing market. Port St. Lucie has really benefited from that, and in a big way. And now you have homes being built in Tradition at $1 million, because so many people are moving down here, and there's a market for it now. With that being said, there's also a new community going up in Tradition by Mattamy Homes, and it's going to be a community for first-time buyers, and they're going to be starting in the 3s. So it's going to give some opportunity to people that didn't have an opportunity before to purchase there. So it's it's 2%. I get it, but it's also a lot less money than everywhere else in South Florida, and you get to live in South Florida. So, so that's that. Don't want to harp on that very long, but I hope that answers that question for everyone. All right, so let's get into it. So we have some slides to share with you guys tonight. Here's a big one. So if you own a home, you're happy, because this just came out. So Q1 of 2022, year over year change in home or owner's equity is $3.8 trillion for the entire United States. I mean, that's a lot of equity, Brent.
That's a tremendous amount of equity. Lee, on that point, a lot of people saying that refinances are dying. Probably 25-30% of what we're doing this month is their refis, actually, even at the higher rates, because we're paying off tremendous credit card debt, car loans, that type of thing. And actually, there's some benefit as far as payment relief, and that's what some people are needing with the inflation situation. So there's an opportunity in the equity appreciation certainly as well. But yeah, that's a tremendous number. I mean, I don't think people realize how big that figure is. That's tremendous.
Right. Well, I mean, I just went, spoke with a woman today. She has a home in Green Acres. I think it's like around 1,300 square foot. She bought it 3 years ago for around 150, 100, around $150,000. House is worth 350, 360,000 now. So,
right.
you know, she's looking to sell it and move. But you know, I mean, if you owned a home through this whole thing we just went through, you're a happy camper. I mean, you just did a huge refi for one of our clients, has only been in the house a year and a half.
Yeah, right. And just
I mean, that house they bought for 400,000, and I mean, it's worth almost $700,000 now, and it's in Tradition.
Right. Beautiful home, and it's wonderful. I mean, to give some scope, you know, some perspective on what a trillion is. A trillion is 1 million times. I mean, that's
what people don't understand. He can put $1 million in a briefcase and $100 bills. You can't fit $1 trillion in your house.
Right. Right. It's just crazy. I mean, it's a tremendous amount of equity. And so, you know, there are opportunities in that. We're doing some second mortgages and things like that, paying debt off because that equity is there, you know, and keeping people in their first mortgage. But, you know, a lot of people are and they're not moving now because they, you know, they're in the lower rates too. So it's an interesting dynamic right now, you know?
Right. Well, let's keep going and talk about what some people are saying out there. So this is Glenn Kellman. He is the CEO for Redfin. Pretty smart guy. He's been the CEO for a long time. He says home buyers are feeling inflation squeeze as U.S. headed for recession. So he definitely believes we are heading for a recession. I believe that too. What about you, Brent?
I do too. Well, you know, technically it's two negative quarters in GDP, and the first quarter was down 1.7%, and projections that second quarter could be down as well. So we might already be in one. So
right. A lot of business people believe we are. A lot of experts believe we are. So he says, despite soaring inflation, there won't be a crash in the housing market. He stressed that people who are looking to buy homes right now are still driven by the same factors, meaning we have there are a ton of people right now still looking for homes. Rents are up 15% year over year. And if you look at pending sales, they're down about 8%, but demand is off 15%. That's obviously because of rates going up, which is a leading indicator will continue to retreat because people's stock portfolios have been wiped out. So you're seeing less. We're seeing a lot of less in investment real estate right now, which I don't know. I'm going to show you some stuff that I think that's a mistake, but there will be an uptick in foreclosures, he says, but the number will be very low. And we've seen no distress in the market right now whatsoever, he noted. And he says that not to expect a market crash.
Yeah, I agree. You know, one thing, you know, as far as foreclosures, and when you look at some of these statistics, you got to be careful because, you know, to give you an idea, foreclosures could quadruple and they'd still be way below the mean of you know, historically, you know what I mean?
Right.
Because they've been so low, because there's so much equity. There's really no reason to have a foreclosure right now. There really is none.
Right.
You put it on the market, you'll sell your home with the equity it has in it. And there's very few upside down homes because of all the, you know, we've washed out all those upside down homes from 2008, 2009. And so, you know, if you have an issue paying bills, that type of thing, you own a home, you know, I always tell people too, Lee, you know, people, I don't want to, you know, I'm worried about it. You know, if I can't pay my mortgage, I'll have foreclosure. And I said, well, with a foreclosure, you've got 6 to 8 months. With rent, you got about 30 days. You know, and it's kind of like, you know what I mean? There's a pad there, you know, and so, you know, it's actually, there's a reason that the net worth of homeowners is so much greater than a renter because, you know, you're going to pay somebody's mortgage, so you might as well pay your own, you know.
Exactly.
And, you know.
Exactly. And right now, as we've said before, you know, mortgages are rents are about the same price as mortgages now.
Right.
So this was another CEO, Jerry Howard. Housing industry insiders warn of a real slowdown, drop in builder confidence. So this is what we talked about this a little bit last week, and I wanted to show it. The national homeowners builders warned that Wednesday soaring inflation, higher mortgage rates, and slowing home sales, with CEO Jerry Howard calling for a combination of a perfect storm. he added that right now, main thing we're seeing in this transitional phase is that we have put escalator clauses in everything so that builders will be able to cover costs, which can't be foreseen. So this is something that new home builder buyers want to be aware of, is these escalator clauses. They're in every contract. And with things moving around like they are right now, I mean, we have no idea, what the market's going to look like on a daily basis. So I think that, if you're buying a new home right now, this is something you want to be definitely aware of, is these escalator clauses, because these builders are putting them in their contracts to protect themselves.
That's a recent development, isn't it, Lee? Really?
Yeah, they've had them in there, but they've never really used them. But now they're, with what's going on, they might end up using them. So we'll see what happens. Definitely right now we're seeing traffic slow down in new construction, but they're still selling homes. Let's see how many specs they continue to do. That might be something they pull back on, as spec homes. But there's some real opportunity in builders. I'm going to talk more about that tomorrow, but there's some real opportunities right now with builders. They're offering all kinds of incentives for buyers right now to come in and buy, because they still want to stay on their projected path, obviously. And if you look at some of these builder stocks, these home builders, they're still doing pretty good. I mean, they're still showing decent revenues. So
yeah, well, demand's there, and so their costs are going up. So that's if they have escalator clauses to protect them and that downside. I think we're getting appraisals in on new homes, Lee, and as you know, the appraisals are coming in high, which is rare. You know what I mean? Typically,
right.
So.
Well, they're so far out, some of these builders.
Right. Yeah.
So, there's so much time. So pending home sales unexpectedly break a 6-month losing streak. So as of in May, sales of new family homes were sold at a seasonal adjusted annual rate of 696,000, up 10.7% from April. So from April to May, we saw prices increase across the board. These are U.S. statistics. So Florida, we have a much higher market. So this is definitely something that's happening in the market. Is prices are still on the upward move in most states. Jeff Sika was on the other day with Varney, founder and chief investment officer of Circle Square Alternative Investments. This is a smart guy. He says, I think in times of, this is where we're talking about, looking at investment real estate. He says, in times of inflation, the best investment is real estate. It's the reality of it. It has been. Right now, he says there's a 7 million home shortage in the United States nationwide. So as long as we have a supply and demand problem, like you're saying, we're going to have home prices continuing to go up. And, Blackstone is still out there buying homes, and they're not selling them. Where independent owners are selling homes, Blackstone is still buying homes and they're renting their homes. So that's putting upward pressure on rental market and upward pressure on the sales market. So, I mean, right now there are very few rentals. Rentals are expensive, and where you can go out now and buy a home and not have 15, 20 offers against you. I mean, in some houses we're selling right now, there's only 1 or 2 offers. So and we've had homes that we've sold here recently where we've gone into contract with we were the only offer on the home. So we're definitely seeing a change in the market right now.
Yeah, that's welcome. I know it sounds, like everyone wants a go market, but I'll tell you what, as far as choices out there and, getting your offer accepted and also, you don't want to see 20% appreciation every year. A $400,000 house with 20% appreciation year after year is just shy of $1 million 5 years later.
Right.
It's just, You don't want that. You want a normalized market, and then we're hopefully going to get back to that, so it's sustainable, and incomes can catch up, because basically incomes will drive appreciation of a home, because people will pay, especially in an area that's highly desirable like South Florida. People will pay whatever they can. The affordability issue, that's the affordability index, is what I watch really closely, because that's what you see become a problem, and then you start seeing multi-generational housing, 3 generations of family in one home. That's what we saw in California, and we've got a long way to go before we see that here in Florida, so it can run. I've seen it. And it's got a ways to run.
There's just a ton of land,
right?
Especially like St. Lucie County, Martin County. Mattamy Homes is putting a new city in Martin County, a city. They're building a city in out in the acreage, Westlake. It's a city.
Right.
So there's a ton of land, especially, Martin County and St. Lucie County. And then next is going to be, of St. Lucie County is going to be Fort Pierce. That's going to start, start getting built out, once they start running out of land in St. Lucie, which they're going to. People are going to keep moving here. So
it's not stopping.
All right. So this is a lot of stuff, but this is CoreLogic. They had a lot of stuff on rent prices. So it says April jump in U.S. rent prices growth put pressure on inflation. So this is rent prices is part of the inflation going on in the country right now. Single family rent growth experienced 13 consecutive months of record-breaking annual gains. Rental supply shortages and strong job markets continue to drive sustained growth. We're going to talk about job markets in this in a little bit, because that's something that people need to understand also, is that the job market is still very, very strong. National single family rent growth across 4 tiers year over year changes were follows. So lower priced homes went up 13.7%. Middle price homes up 14.4%, higher middle price homes 14.6%, and higher price homes at 13.5%. So Miami posted the highest year over year increase in single family homes in April 2020 at 40%. That's all the hedge funds moving in there.
Right.
And Orlando recorded the second at 25.8%. My son's just freaking out because his rent's going up so high. So
my daughter's went up, $1,000. It's just, there's 4 girls, and they're young girls trying to make it on their own, and it's shocking. I'm sure it's over 20% in Palm Beach County probably too.
There's no doubt that inflation is hurting everybody right now, and it's a terrible thing. So that's our question for today, is leave it in the comments section. What food do you enjoy eating the most that you're not buying anymore? Well, maybe not the most, but what food do you enjoy eating that you're not buying anymore? I'll tell you what mine is. I went to Costco the other day with my wife, and 3 weeks ago when I went to Costco, I looked at it. I love chicken wings. I'm not paying $36 for a bag of chicken wings. I'm just not doing it. There's no way am I paying $36 for a bag of chicken wings. I grew up on a ranch where I could walk out and get as many chicken wings
as you want, right?
they were like $25 for the whole bag. You get the big, huge bag at Costco, right?
Yeah.
And $25, $36 they want for chicken wings now. So leave it in the comment section. What's yours, Brent?
You know what? Last night's funny. We switched to chicken legs from chicken wings,
right?
And so,
chicken legs are way cheaper than chicken wings.
Last night, that's what I had in the air fryer. If you don't have an air fryer, they're awesome.
Absolutely. Chicken breast is less money than chicken wings.
I don't know what chickens are growing different parts and different numbers, I guess. I don't know what the logic is on that, Lee. Do you know what the backstory is to that?
I
Well,
don't know. I mean, I'll
Kentucky
pay a
Fried.
little bit more for a steak, but
Yeah.
chicken wings, I can't bring myself. I'll pay more for fish, but just chicken wings, I can't do it. What's the deal with chicken wings, man? I
Yeah.
don't understand.
Well, they're putting less
There's
in
a
the
run on
boxes.
chicken wings.
Oh yeah, they're making smaller containers for different foods. I noticed too, and things like that.
Oh
And you were
yeah.
saying the paper bag or the plastic
Oh,
bags.
the Ziploc bags, the gallon bags are no longer a gallon.
Yeah, it's crazy, right?
It
I
takes a
mean,
long time for that stuff to come back too, by the way. I mean, like,
yeah.
prices go up a lot faster than prices come down. So,
Yeah.
all right. So here we go. Talking about the job market. The Florida Department of Economic Opportunity announces Southwest Florida. This was in May, right? The employment data. So, there are more than so the labor force grew by more than 21,000 year over year in April. And this is startup jobs. So this is a job finding site. So Florida has a reputation for old retirees, hot weather, and occasional hurricane. However, one of the most affordable markets in America. So just keep this in mind. This is recent. This is just this month. Most affordable market in America is thriving with new tech startups who are looking to attract young talent. So that's why you and I are seeing so many millennials calling us moving to Florida, because there are so many tech jobs in Florida right now.
Right.
And across the board, Jacksonville, Orlando, South Florida, tech jobs coming in everywhere.
And millennials are the largest new, obviously, first-time home buyers right now.
Yeah, it's like the baby
demographic.
boomer boom. It's like the baby boomer boom, right?
It's the echo boom. Yeah. It's,
and I think a lot of that was COVID too, because you had we have clients that are in the restaurant industry, and the restaurant industry is really having a hard time finding people. And I was talking to one of the GMs, and he had a really good response to it. I'm like, why are you guys having, why are you having such a hard time finding people? And he says, because a lot of people that were in the restaurant industry left because there were jobs in different sectors, and they actually went and found a job that they liked more than the restaurant business, because there's so many jobs out there right now. And this is a real problem. And I don't know how the Fed's going to deal with this, is that unemployment is not a problem. I mean, in the mortgage industry, we have problems with unemployment. Sorry about that. In the mortgage industry, we have problems with the unemployment, but and then the tech and like big tech is laying off. But the mortgage industry is laying off because of refis, right? But big tech's laying off also. And you're seeing some layoffs in the big real estate companies. Redfin had some layoffs, and so did Compass. But they have places to go.
Yeah, they have places to go. And we look at this, in every, we got to remember, real estate is very localized, and so, and that's how you should evaluate it, as far as values and markets. And right now, South Florida is a little different than other parts of the country, quite frankly. We are expanding our company right now when everyone else is laying people off. And the reason we're doing so is there's good talent available out there right now. There's companies are letting go 30-40% of their staff right now because refinances are down, which is true. We focus on purchases, and so it's a little different market, and the demand is still there. So we're looking at this as an opportunity to acquire some great talent. And so, but there's companies laying off 30-40% in the mortgage industry right now. So it's just, we're not seeing the slowdown yet, frankly. Couple reasons, but I think a lot of it's, the market that we're in is a big part of it. The demand's very much here, and we're also looking at creative ways to get good information out to folks like this show. So I think if you're creative, just being creative.
Sorry about the technical difficulties tonight, internet issues, but thanks for joining us tonight. We'll be back on next Wednesday at 7:00 with Brent and Lee. So don't forget to show up and leave your comments in the comments section. If you have any questions, we'll answer them next week on Wednesday. And if we also look at them during the week and answer those comments also, but we cover some of them on next week's show also, just like we did today. So again, thanks for joining us. Be kind to each other, and we will see you next week.